Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, let's talk again about the euro currency. Well guys, on the daily time frame chart we do not see much events, a lot of events, so yes, the market still has continued the calling inside of this tight consolidation. Usually this indicates that market is building an energy and we should be ready for a breakout either to the downside or to the upside. In general, yesterday we have said that since market stands too long in the sideways action, the chances on downward continuation becomes greater and greater, but until markets will hold above the 136.80 area, the chances on the possible bounce to the upside to show the retracement as the result of the hidden daily oversold at the fib support still exist. And until market will hold above this area, we could still get the retracement based on this June-Napoli stretch pattern. That is the tactical issue, and it doesn't suggest a possible reversal to the upside or something a really big event, but just the tactical possible bounce. And after that, the downward action really could continue. So, if you take a look at the forward time frame chart, there is some interesting moments that have appeared. So you can see that's our consolidation. Yesterday we said that market stands too long around the weekly pivot point, and it means that market can't make the decision about the possible direction. So that's some sort of the indecision of the market. But yesterday we see that market has formed side by side some bullish grabbers. So that was the bullish stop grabber here, return right back up here again. So this pattern in general suggests the taking out of these highs, and that means that in fact as a result we could get something of that sort. Okay, and this really could lead us to the area that we have initially specified as the possible target that market should reach if this retracement will happen. This target stands precisely at the weekly pivot resistance 1 and right at the nearest fib resistance on the daily. It's 137.80 area. As you can see, that will be also an agreement with this possible ABCD pattern. The invalidation point of this pattern stands right here. Conversely, I will mark it with the red circle. Okay. Conversely, if this low will fail and this pattern will fail, market will turn to the downside. That could lead to the appearing of the butterfly. That suggests the possible deeper action to the downside. Okay, so that could be the butterfly with the possible targets around 136.22 and approximately around 136, even slightly lower than 136. So that could mean the continuation. So that's why, from that standpoint, this low is very significant for us. If you would like to take the short position, it's better to wait when the market will take out of these lows and will turn to the downside. If you would like to take the long position, well, you could do this with placing the stop somewhere below this area, because that is the pattern that is the foundation for the possible upward action. As soon as it will fail, we do not have any other patterns that could suggest the possible upward action, except maybe this head and shoulders or reverse head and shoulders pattern. But simultaneously, when the market will move below this area, it will show the significant deviation from the normal shape of the head and shoulders, and the failure here will suggest that market has passed through the low of the right shoulder when it already has been formed, and that will be a really big challenge on possible downward continuation and the possible appearing of the butterfly or something of that sort. Well, on the hourly time frame chart, personally guys, I do not see much to discuss. So that is now an area that we have discussed yesterday. We said this market will hold here. The chances still will be on the possible upward action. Market has held here, and chances really exist. But as I said, this area is still very important. Mostly because you can see that this action to the upside is very choppy, and it's very difficult to say what today really will happen. Overall action to the sideways for a too extended period compares to the left shoulder mostly stands in the favor of the bearish situation rather than bullish. And in general, as we have discussed yesterday, that also could be some kind of the dynamic pressure when the market stands flat, although trend holds bullish. But the appearing of the grabbers slightly increase the possibility of the upward action of this ABCD pattern. Anyway, guys, I think that this riddle will be resolved as soon as the FOMC minutes will start, because today all investors will wait for FOMC minutes, and because they could get impulse to the market as to the upside as to the downside. But in general, if we suggest that we wouldn't get this grabber, I would say that in general this situation mostly looks bearish rather than bullish, because the standing in the sideways when the market has hit oversold and after that has shown this really significant jump up mostly suggests the heaviness of the market. It's an ability to continue move up. It's an ability to work out with this initial impulse. So the market just has not enough strength to continue move higher. That's why if FOMC minutes won't give market any impulse to the upside, I suggest that we really could get the downward continuation here in the fail of the bottom of this grabber pattern. Anyway, guys, technically the invalidation point of the bullish scenario is still here at the same point, 1280, and it just will be safer to take the short position if market will take out of these lows. That will be really some sort of the confirmation of the bearishness of the market. That's why I call you to wait when the market will take out of these lows if you would like to take the long position. Sorry, if you would like to take the short position, of course.